It's been a bumpy start to the year for the AI trade, as fears about whether massive investments in artificial intelligence will actually pay off permeate markets and weigh on some of the hottest names in the sector. We have Morningstar senior equity analyst Brian Colello, who covers the semiconductor industry, here to walk us through what it all means. Thank you so much for joining me, Brian.
Hi, Sarah. Happy to be here.
So, I suspect for many investors, this kind of ongoing pullback in tech stocks is very top of mind. I'll timestamp us. Today is Thursday, February 5th. And over the past few days, we've seen really steep losses across the board from semiconductors to software and other AI linked stocks. What is driving the action? Can you walk us through it?
Yeah, it's a good question. And you could say that the sell-off is expanding to other areas of the economy as well. So you could just make a case that everything is being sold right now and a lot of fear and a lot of caution. I think specific to semis, I think the two earnings that were probably the biggest disappointments in our eyes were Intel and AMD, although we would preface both by saying there were big run-ups prior to those earnings. What I would say the biggest issue on my list is in both cases, investors were looking to strong demand for server CPUs. So in the past couple of years, these companies have been buying AI GPUs to build out AI workloads. They've been putting CPU refreshes on the back burner for traditional servers, for traditional data centers. There's been a bit of a run up for that. As we get into an agentic AI world where the agents are talking to one another, the data still sits on those traditional servers. So Intel and AMD both hinted at strong demand in the near term, and that's actually come to fruition. I think investors bet that strong demand would have meant massive revenue growth and massive potential and massive earnings beats. And neither company delivered to that extent. Intel actually had supply problems because they build at least some of these parts in-house and just don't have enough capacity. AMD outsources and they're seeing growth, but still not a smash hit. Compared to what we're seeing, probably the biggest issue in semis right now is the memory shortage. And so memory and hard disk drives, whether it's a SanDisk, Seagate, Western Digital, Micron, among the US names, are benefiting from tremendous pricing and tremendous shortage. And that bottleneck's going to be here probably for 2, if not 3 more years. Seems like investors may have bet that Intel and AMD would be in the same place, and they weren't. I don't necessarily think that was the right bet to make, but both those companies sold off. I think to a larger extent, there are some concerns that popped up, and you could look at even Google this morning discussing 180 billion of CapEx, which is almost double what they spent in 2025. Investors, again, might be freaking out about the ROI on that investment. And if the ROI is not good, that leads to probably lower chip sales down the road for the entire ecosystem. Nvidia and Broadcom are up today, as they should, because Google is going to spend so much now, but it does bring the question about what will the spending be beyond 2026.
Okay. So I want to come back to earnings, but I also want to zoom out a little bit and think about the last couple of months rather than just the last week. We saw semi stocks and AI stocks pull back, at the end of last year, at the end of 2025 too. Is it the same pressures? Why did that happen? And, were investors right to be worried?
Right. It is some of the same pressure. There is more concern about an AI bubble now than maybe what we were hearing 6 months ago. And maybe, again, that's tied to the large spending plans of some of the big hyperscalers like a Meta or Google, for example. There's still continue to be questions about the benefits of AI and how it'll be deployed by businesses and whether the average business will get a good return on investment. So there's all those questions are still valid and those are coming through. I think in the past 2 months, the other issue, I guess I should say, so that AI bubble concern is not a huge concern to us. We don't think that is valid. If you look at Nvidia and again, the spending that these companies just announced, there is going to be massive spending this there. So I think the AI bubble concerns are overblown. The other set of concerns we're seeing is around OpenAI specifically. Google came out with its Gemini 3 model to very strong reviews. And if there's a world where Google becomes the winner of artificial intelligence, that's bad for OpenAI and its suppliers, which would be Nvidia, Microsoft, Oracle, and some others. So there has been some risk about whether OpenAI can receive the funding to spend on all the chips that they've promised or what they want to do to date. We still think OpenAI will get there, but there's still plenty of partners willing to invest to allow OpenAI to build the ecosystem. I mean, there's still hundreds of millions of customers on ChatGPT today. So, OpenAI, we don't think is going anywhere, even if Google, did well with this last go around. We expect OpenAI to fight back, and that'll support the businesses of Nvidia, Microsoft, and others.
Makes sense. One through line I'm kind of hearing from, the first part of our our conversation to right now is this kind of end of the like rising tide will lift all boats era of AI. It feels like investors are a little more focused on, specific companies, specific deals, specific business lines. Does that track to you? Is that a fair kind of assessment of where we're at?
Yeah, I think that's a fair one. I think investors throughout have been seeking winners and losers in the AI space, and the prospects of all of them can change rapidly. Google uses more in-house chips than some of the others thus far. So that is a relatively net negative for someone like Nvidia. Others are going to start using their chips too. We expect Nvidia to lose share, but the pie is going to grow so big that Nvidia will still continue to grow. So that everything we're seeing is still tracking within our thesis. But if you thought Nvidia was going to dominate the world and go get to $1 trillion of revenue by 2030, that seems a little too optimistic right now, and that's certainly not what is implied in the share price.
Right. You
AMD
might be
is
disappointed.
Yep, exactly. AMD is going to be a little bumpy as well. They're very tied to the OpenAI build out. OpenAI is the test case for AMD to show what it can do. And when they reported earnings, that they're coming out with, they expect a ramp in GPU sales in the fourth quarter of 2026. They always said second half. Now it's fourth quarter. I think some investors were concerned about that, but we do think AMD will deliver and be a supplier to OpenAI in building out relatively close to what they say. But again, if you are skeptical of OpenAI's prospects, AMD is in a tough spot too, and that's probably reflected in the recent sell-off.
Makes sense. So there are differentiators to watch.
Mhm.
Okay, let's go back to earnings season. You mentioned already that we've kind of seen the market punish companies that haven't lived up to some very high expectations. Even if the results are coming in, above consensus and solid, and even if our analysts are happy with them, but under the hood, kind of beyond the market reaction, what have we learned from this round of earnings so far? What's most important for investors to take away?
Yeah, good question. So I think at the start, you have to look at the hyperscalers and what they're going to spend because that's driving so much of AI demand. So Google coming out and again doubling their capex is pretty meaningful and says that AI is not slowing down anytime soon. Meta already hinted they were going to spend 600 billion over the next 3 years, which seemed like an eye-popping number. They're coming out at something like I think it was 135 billion this year. So they're on pace for that. So not only big spending this year, but also accelerating. So we're getting good news from the hyperscalers on the capex plans for 2026. So those concerns of an AI bubble are at least early, if not
Right.
invalid at this point.
The money will be spent
The
still.
money will be spent.
Okay.
Then that
Okay.
leads me to Nvidia. Nvidia is a company that basically guided to 300 billion of revenue in calendar 2026, and it might even be higher than that. They need to get the supply chain to expand quickly enough to support that. So we'll see if they can get enough supply. I mean, Nvidia since 2023 has been selling everything they can make. So they're still set for a good year in 2026. So I think that is still supported, and Nvidia is an undervalued stock to us. Server CPUs, again, very strong demand there, good pricing, just hard for AMD and Intel to keep up. So not the sort of smash hit we've expected or that some investors were expecting. Memory has significant shortages right now, price hikes, which is very rare in the memory space. And so tremendous profitability coming there. So memory is probably the biggest issue. That's actually weighed on some other segments. Qualcomm reported last night. They said that sort of their Chinese-based Android customers, probably on the low end, are going to build fewer phones because of rising memory prices. They become sort of uneconomical, so they're going to be more conservative. That's going to weigh on Qualcomm's chip revenue, so that's a negative. PCs are sort of the same place. Intel and AMD are not expecting much in terms of PC unit growth this year, probably flat to down. Again, that low end PC is probably going to carry a price hike because the memory is going to be more expensive. So I would expect PCs and smartphones to be more expensive in the next, let's say, 12 months. And it's bad for consumers and bad for unit sales and bad for the chips that go into them. So I think those are the big
Okay.
lessons. Maybe the last one on broad-based semis like analog chips, microcontrollers that go into cars, industrial equipment. That's all bouncing back. That was faced a big cyclical downturn in 2024 and a bit of 2025. Companies are now bullish that we're back to a normalized business environment, and so we're encouraged by that as well. Again, companies that didn't blow past consensus numbers with guidance really got punished. And so we've seen some sharp sell-offs, but I think the underlying businesses are still pretty good.
Okay. So investors are still nervous even though the fundamentals look all right. That seems to be a really pervasive theme this year in the
Sounds that
market
way.
so
Yeah,
far.
it really does.
Yeah. One thing I wanted to make sure I asked you about. So your team recently published, your fourth quarter pulse report on the semis industry. What are the main takeaways? What's ahead for semis in 2026? It sounds like you've touched on this already, but are you seeing signs of kind of slowing momentum in demand or revenue for chips for powering AI? What does the outlook look like?
Yeah, sure. For 2026, and again, the earnings recently sort of confirmed what we were already thinking, that it's still going to be another good year for AI spending. So a lot of GPU revenue at Nvidia and others. Broadcom's still going to grow tremendously, and AMD is going to start to get its uptick from meaningful revenue with OpenAI. So on the AI processor side, the GPUs, that looks really good to us. Server CPUs, again, look really good to us after a couple of sluggish years prior to that. Memory is going to have a massive year this year, again, because of the price hikes and the supply constraints. So with all this data being created in AI, they need places to store it. So the SanDisks of the world are going to do extremely well. And then analog, industrial, those sort of names. Again, they're recovering, and I think the fourth quarter reports we just heard are in line with what we were thinking, but there's always macroeconomic concerns there as well. There isn't a lot of momentum for electric vehicles, and EVs carry more chip content per car than a gas-powered car, so that's a little bit of a headwind that might happen. But I think the underlying secular trends are still there. In general, if you're selling broad-based semis like analog chips, microcontrollers, there's just more chip content in each car. All these bells and whistles that are added to cars, it's all done with electronics. It's all done with semiconductors. So that's a rising tide we've liked for probably a decade at this point. I think that's still continuing. Industrial, same equipment, IoT, smart devices, factories, things like that. And then if you look 3 to 5 years out, when you get to autonomous driving, you get to robotics, those are good long-term opportunities too.
So plenty of demand tailwinds looking ahead.
We think so, yes.
Great. And so when I hear, fundamentals look good, demand tailwinds are there, stock prices are slipping, what my brain goes to is like, is this a bargain? Is this a discount? Given everything that's happening, is now a good time for investors to buy semi stocks? Is it a good entry point? And if it is, what are your top picks?
Yeah, we think there are buying opportunities in semis right now. And of course, anytime the tape is scary and there's momentum, and we haven't even talked about the software apocalypse and what's going on in those
Right.
stocks selling off as well. So obviously, tech is selling down. But if you're willing to have a bit of a longer term view, or even just willing to go against the grain, we think there are buying opportunities. So Nvidia is the first one we think is cheap. We're at a 240 fair value, trading at
Yeah,
170. Again, there's
I'm sorry to interrupt you, but that's very unusual, no? That we never hear Nvidia and cheap in the same sentence.
Exactly. Nvidia wasn't cheap in our eyes through a lot of the run up, but again, we did not fully appreciate the extent of the spending that the hyperscalers were going to do. And quite frankly, if you look at hyperscaler spending now, if they told investors 12, 18 months ago what they were going to spend, investors probably would have freaked out. It seems like investors are freaking out now of what they're going to spend for 2026, even though we know that AI is in a better place. So there's still concern on the CapEx. But yeah, NVIDIA is a cheap name right now. There's concern that Google is going to be the dominant AI vendor and use its in-house chips. There's concern about the NVIDIA OpenAI partnership, and that NVIDIA might not sell everything it was previously expected to sell into OpenAI. So there are concerns there, but we're looking at calendar 2026. Things are still solid. The Nvidia OpenAI relationship, I don't think OpenAI has terrific alternatives at this point. So I do expect that all to work out with Nvidia. Nvidia is still the backbone of AI today. Most of these models are built on Nvidia's CUDA ecosystem, the library that runs only on Nvidia GPUs. Nvidia's full rack systems are still best integrated. So we still think 2026 is going to be a good year for Nvidia. So we think that one is cheap. On the flip side,
Great.
I know my colleague Will Kerwin thinks Broadcom is cheap as well. If you like Google, you should like Broadcom as well. They are the ones that build the TPUs for Google. Now there's some concern that Google's going to bring more of these workloads and more of the IP in-house, and so that will weigh on the profitability or the production of Broadcom in the future. But we're still very bullish on that opportunity. Never mind the rest of the other great businesses inside of Broadcom. AMD with the sell-off, we think looks cheap right now as well. Trading at 200 or so versus our 270 fair value estimate. I think the
Yeah,
sell-off
that's a
on
pretty
that
big
one,
gap.
yeah, I think the sell-off on that one was way overdone from their earnings on Tuesday night. I didn't see too much that I disliked out of that report, so I think that they were unfairly beaten up. And then the last top pick of mine is NXP Semiconductor, and they're more tied to the automotive end market, more than 50% of revenue. And again, when we talk about EVs, software-defined vehicles, radar systems, battery management, and when you get into eventually an autonomous driving world, those car makers need more chip content from trusted providers with strong reliability, 0 part per million defects, and that's what NXP can deliver. NXP is not much of an AI play, and maybe they're a little left for dead for that reason, or just not as loved as some of the others. But we still like that automotive opportunity. I think NXP is a good place to be.
Great. Maybe a comfortable place for someone who's a little more worried about the AI stuff that we've been talking about and wanting to, stay in tech, stay in semis, but look beyond the trendiest, hottest headline.
Makes sense.
Makes sense. All right. Well, Brian, thank you so much for walking us through everything. This is going to be a fascinating space to watch over the next couple of months. I'm, curious to check in again soon.
Happy to do so. Yeah, it is a very exciting time. So stay tuned.
Great. Thanks, Brian.
All right. Cheers.